Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's another subdued day of trade for the markets. The Nifty trades around the 11,400 mark. PSU banks are the top sectoral losers. Punjab National Bank reports a net loss of 940 crore in the first quarter owing to higher provisions. However, the lender's asset quality has seen some improvement. Mahindra & Mahindra delivers a strong quarter led by strong volume growth. The management says a normal monsoon should further aid rural consumption. And Adani Ports is the top loser in Nifty. The stock fell the most in 5 months after forex loss impacted its first quarter numbers.
Well, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah with Navneet Saluja, of course, and the markets doing precious little. So hardly any moves there in trade. We could also, of course, look at what's happening at the broader end of the spectrum. The mid caps and the small caps too would be subdued in the session today. Very quiet compared to what's happened the last few days. In fact, a bit lower for the Nifty mid cap index as well. And that'll be telling in the market breadth too. Nothing alarming, but the market breadth would be in favor of the declines. As we speak, the numbers of TVS Motors on the screen as well. And a profit of 147 crores versus our estimates of 172 crores. So clearly the numbers of TVS estimates slightly below what the expectations were, and a bit of an immediate reaction that we're seeing on the stock. Two-wheelers by and large have had a slightly iffy performance this quarter, and this one doesn't come as a bit of a surprise. Let's reserve our thoughts. Let's wait for some more numbers to come in. But optically, at least the net profit numbers well and truly below estimates, and optically the numbers seem to be lower, and which is why this correction on TVS Motors. Mind you, it's not a stock that is trading at highs, but still seeing some bit of disappointment. Revenues too at 4150 crores versus our estimates of about 4220. Well, slightly lower than what estimates, but you would probably still say at par in terms of expectations. So no big disappointments on the revenue front. Bottom line below estimates. My guess is maybe, just maybe, operational numbers would have looked a bit more tepid than what otherwise we would have thought of. We'll get to that in a bit, but TVS Motors reacting duly. Just quickly get the Nifty heat map before I hand it over to Navneet and just show you what's happening on the index by and large. And equal and opposing forces at work on the banking space. Even Stevens, as far as the market breadth goes, some big disappointments for Adani Port investors, 6.5% lower in session today. But the opposing forces at work that I was talking about, Axis Bank sees a bit of a downtake in the session today. IndusInd Bank is lower, ICICI Bank is lower, and on the opposite side, I had seen Yes Bank up in the green marginally, HDFC Bank and Kotak Bank marginally higher in trade. So a bit of a reversal from what we've seen the last few days, which is that the retail-focused banks are doing well yet again, and the corporate-focused banks are just going slightly slow today. Titan has some gains to itself. Asian Paints marginally higher, but no clear trend out here. But for the fact that result reactions are being either rewarded or punished, as is the case in Adani Ports in the Nifty, or as Navneet will see in a bunch of broader market stocks, because a lot of reactions today, the Avanti Feeds and a few others, are all a result of how subdued the quarter was for them.
That's right, Neeraj. A lot of result reactions have been seen, at least in the broader markets today. But let me quickly tell you what's happening in the futures and options market today. Bank Nifty is just about trading flattish. But if you look at the futures, we've seen open interest build up coming by for the second or the third straight day, which is telling you that still at current levels, there are some fresh longs being taken. However, the index is just about flat, 3% higher. Actually, if you look at the open interest on an intraday basis, I believe there's a lot of unwinding which has taken place. Last time when I checked the open interest, it was up nearly 8 to 9%. For Nifty futures, let's just pull up that one and check. The premium is about 24 points, so that's just about the same that we saw yesterday. 3% higher in terms of OI build-up. Clearly, there is some resistance which is coming by above the level of 11,400 that we've been witnessing right since yesterday. On the option side, if you were to look at the activity, well, both on the call as well as put side, there are some strikes which are really active in trade. So 11,500, which is sitting with maximum open interest. I've been highlighting this despite of markets being around 11,400. We've not seen any unwinding for 11,500, considering that's the strike sitting with maximum OI. Still in today's session, 4 lakh shares being added there. And on the put side, 11,200, 300, all of them are witnessing some bit of OI addition. So the near-term range is between 11,200 to about 11,500. Quickly, let me take you through a couple of stock futures. Adani Ports, Neeraj highlighted, that's the top loser in Nifty today. In fact, if you look at the numbers, CLSA has said, low SEZ booking and forex loss is actually the reason why it's hurt the bottom line this time around, but no respite. It's down 6.5%. Look at the OI build up 42%. That's telling you there are a huge amount of short positions being taken in this counter in today's session. Another result reaction is Arvind, where shorts have been seen. Open interest has surged in today's session. And if you look at the earnings of Arvind, Q1 textile business margins were under pressure. OI buildup is really high, 30% almost. Again, fresh shorts seen here. NMDC comes out with its numbers tomorrow. Watch out for this one, as the counter has gone up in today's trading session. The volumes so far on the cash side are higher than what we recorded the entire day yesterday. And let's just pull up the futures for this one. There is some bit of OI buildup, not too much, but just highlighting this counter. It's 5% higher, and the numbers come out tomorrow. And before I hand it over to Neeraj, I just want to pull up TVS Motors. Neeraj, it did come on my radar. There was a lot of activity which was taking place probably ahead of the numbers, and it looks like now the bottom line is below estimate, but we'll have to see if there are any one-offs. The stock's trading in the positive territory since morning. It's been really active. At one point of time it was up nearly 3% in trade, but post the earnings there has been some bit of blip. Yeah, I wonder if there are one-offs at play here, or is the market simply digesting that the stocks have fallen quite a bit, and therefore there might be some merit to the other side as well. But let's wait and watch. Let's not pass any judgments. Typically this quarter, even for beaten down names, if the numbers are bad, the stocks are getting punished, and vice versa. If the numbers are good, the stocks are getting rewarded. Vinati Organics is a case in point. Operationally, a very strong quarter for the company. Profits more than doubled, while margins too saw quite a bit of expansion, 34.7% versus 27.6%. So good numbers all round. Let's talk about the quarter gone by and the outlook ahead with Vinati Mutreja. She's the executive director of the company. He joins us right now on the show. Vinati, good having you. Thanks much for joining in. Looking at what peers in the industry have done, looking at what you've done over the last 2 or 3 quarters, this just comes as a bit of a big positive surprise. I don't think too many people anticipated such a strong quarter. What went right, and what's gone right in the quarter? Can that continue into the quarters ahead? Yeah. Absolutely. See, if you see, we have been announcing, and we've told that our biggest competitor for ATBS, which is our largest product today, exited the business stopped producing ATBS from January 2018. So since then, our sales of ATBS have shot up. We are running at, till last year in 2018, we were running at 65% ATBS capacity. Today, we are at 100%. Now, because of the shortage of the product in the market, we've also been able to get a price increase, and especially the new customers that we have added in our list. We are selling at improved prices, which has improved our margins also. So this is very much sustainable in the long term, because ATBS is a very difficult product to manufacture. Technology is a barrier to entry, and so you would see our numbers significantly improving from Q4, and Q1 is even better than Q4. And we expect to maintain this for the next couple of years. So, Vinati, the base effect obviously will come into play at some point of time, may not be in the next 2 or 3 quarters, at least not the next 2 quarters. But I heard you mention that you're operating at 100% capacity on ATBS now. If indeed the outlook is looking so, okay, let me rephrase my question. Is the outlook looking so strong that you would contemplate expanding capacity or making some inorganic move on that bucket in the near future? Yeah, absolutely. So with our last quarter's results, in fact, we had announced a 15% debottlenecking plan. So we will be increasing our capacity by 15% starting October. And then we have further plans which we just haven't completely formed up yet, to add another 30% to our capacity, because that is the need of the market today. Not just because of Lubrisol's exit, but also the demand for ATBS-based polymers has shot up, especially coming from oil exploration, since oil is at about $70 or so. Hi, Vinati. Good afternoon, and congratulations on a good set of numbers. So you've already highlighted the growth that we've seen for the first quarters because of ATBS, and that too because one of your competitors have exited. Tell us the market share which you had in ATBS, that was 45%. I'm presuming that would have gone higher after the exit of your competitor. Yeah, it is presently at 65%. Okay, and can it go higher from current levels as well?
No, because the ATBS is manufactured in China, which is the second largest producer. But since the overall demand for ATBS is increasing, and once we increase our capacity, then yes, maybe the market share would go up to about 70-75%.
What about the IBB chemical, which is used to make ibuprofen? I think BASF has shut down its plant. Any sort of impact because of this that one can expect going ahead with regard to pricing and volume for this one?
See, IBB is a much smaller product for us than ATBS. And yes, Q2 offtake of IBB will be affected because of BASF's temporary shutdown. But we expect to make up for that in Q3 and Q4. And as far as prices go, they are quite unaffected because we have formula-based pricing, long-term pricing contracts with all our customers.
Interesting. So, Vinati, your margins going up would have been a factor of one, the volumes, higher volumes of ATBS, maybe even IBB, because I believe one of your European customers, I believe, resumed production. And part two would be some uptick that you would have seen in prices as well. Will we see further upticks in prices, if not volumes, until October? And therefore, would it be safe to assume that the operational picture will look at least as good as what you've shown in Q1, maybe better?
No, I think better would be too optimistic.
Okay.
We hope to achieve similar to Q1 going ahead, because Q1 there was also a effect of rupee depreciation. We also had one of our customized products which is produced on a campaign basis was produced in Q1. So Q2, Q3, Q4, maybe about 35% EBITDA margins is fair to assume.
Okay. In our interaction earlier, Vinati, the guidance that you had given for FY19 in terms of top line was somewhere about 750. Now, considering first quarter has been really good, and there are some factors which are working out. One of your competitors leaving the industry. Pricing pressures, I believe, are working. Pricing, not pressures, are working in favor of your company. So can we look at a number which could be higher than 750 for FY19, or you'll maintain the guidance that you had given to us earlier?
We did 750 in FY18, so this year we are expecting 25% growth in top line, so we should cross 1,000 crores. In line with Q1 we did about 260, 270 crores in top line. As far as bottom line goes, we should cross 200 crores we should touch 200 crores in bottom line, so which is more than 40% growth year on year.
And Vinati, does it? I mean, I don't want to get into exact predictions for FY20. It's too far out. But does the momentum look like it will last well and truly beyond FY19 as well?
See, absolutely, because we are coming up with a new plant for butyl phenols starting April 2019. So that will add another 300 to 400 crores in revenue starting FY20. Other than that, if at all we go for a further expansion of ATBS, that will also result in revenue addition. So I would expect a similar momentum for the next 3 years, actually.
Wow. Would you need to raise any kind of money for any kind of debottlenecking, stroke expansion, stroke acquisition?
No, currently we have a good amount of cash on hand. Also our internal accruals are quite strong. So most of our expansions and new projects will be funded through internal accruals.
Okay, just a last question, Vinati. You guys usually pass on if there is any sort of raw material cost inflation. Just wanted to check if there is anything that you guys are witnessing right now, and if there's any price hike that's been taken in the second quarter.
Here, raw materials come from refineries, so they follow crude oil pricing, and we are able to pass that on based on a formula-based pricing mechanism to our customers. So if at all there's any fluctuation in raw material prices, that gets passed on and doesn't affect our bottom line.
Well, solid quarter, solid commentary. Vinati Mutreja, thank you so much for joining in today, and all the best for the quarters ahead.
Thank you.
That's Vinati Organics. The stock was up about 20% yesterday, up another 1.5% in the session today. The management commentary, very robust, believes that the momentum will last. Well, let's see if the management commentary from PNB is as robust. It saw its net interest income rise more than 20% in the last quarter. Asset quality also improved marginally, but higher provisioning on account of the Nirav Modi fraud led to the state-run lender posting a loss in Q1. The banks also said it's going to stagger the total impact of the fraud over the next 2 quarters. Joining us now to talk about the numbers in greater detail is the ED of the company, Mr. Prabhakar, and Ira Dugal, my colleague, to take the conversation forward. Ira, over to you.
Good afternoon, sir. Thank you so much for joining us. Let me just first ask for a little bit more detail on the recovery side, sir. Can you help us understand what proportion of these recoveries came actually from 1 or 2 large accounts like Bhushan that got resolved during this quarter?
Yeah, see, our recovery is around 8,445 crores during the first quarter, out of which from the large accounts we got around 3,200 crores. Largely the recovery is from the smaller accounts and it is widespread, not only in 1 or 2 accounts excluding this Bhushan Steel and Electro Steel, and apart from these 2 accounts, all the rest of the recovery is from small accounts and it is widespread.
How is that then happened, sir? Are these smaller accounts also being resolved under the IBC, or are these outside of the IBC where you're taking other measures to get the recoveries in?
Yeah, basically, if you see, at the beginning of this financial year, we have said that we'll be giving more emphasis for this recovery. One thing is we have started one stress resist recovery vertical, wherein exclusively around 2,700 plus people are working, and they go into each and every NPA account as well as a stressed account, and they visit them personally. At the same time, they take all the legal measures which has to be taken very fast. And that's one thing. And second one is all the accounts where resolutions can be done or where the restrictions can be done, where additional financing can be done, all those things it has been attended very promptly. And the third one is we have involved, apart from this recovery vertical, all the people in the field to recover the amount because it's the main important thing for us.
Okay, so this 20,000 crore recoveries that you're targeting for this year, what is the sort of average recovery rate that you're expecting from the large accounts in the first RBI list and even in the second RBI list? Is it roughly, sort of 50 cents to the dollar kind of recovery? Are you budgeting that much, more, lesser?
Yeah, see, out of 20,000 crores, say, as on this Q1, we have already recovered around 8,500 crores. So leftover is as per our individual targets, which we have taken an ambitious target around 11,500 crores. Out of this 11,500 crores, we are expecting resolution from 3-4 big accounts, which will contribute around 4,000 to 4,500 crores. The rest will be from, again, it will be small accounts because we have a very big kitty of NPA accounts. That is, as on date, we have around 82,000 crores.
Okay. Sir, just give us a little bit more detail on the fraud account. So I think taking into account what you had provided for until last quarter and the additional 1,000 odd crore that you provided this quarter, the amount that you have provisioned is roughly around 60 odd %. So the remaining will happen in the next 2 quarters, sir?
See, RBI has given us the permission to make provision in 4 quarters. However, we have taken a conscious decision and we have made around 50% provisioning, that is around 7,100 crores in March itself. The remaining amount we have to make in the 3 quarters, and during the current quarter we have made a provision of 1,863 crores. Whatever leftover will be done in the remaining 2 quarters.
So there is still, sir, about a 40 odd % hit that you have to take on that account in the next 2 quarters is the point I'm getting to.
Precisely, if you see the provisioning, what we did is around 63%. So remaining 37% is left over, and which will be done in the remaining 2 quarters.
So is there any hope of recovering anything from those accounts, sir? Not just the LOU, which I guess is just a payout, so there's no way to recover that unless other banks are proven to be involved in the fraud. But is there any hope of recovering any money from those accounts, whether it's the Nirav Modi accounts or the Mehul Choksi accounts?
We are taking all the possible steps, and rather we are taking proactively recovery steps, I think, and we are hopeful of getting the some recoveries from these accounts.
But nothing has come through so far, I assume.
Now, if you see the legal actions which we have initiated and which the Government of India has initiated are yielding the fruits, and I think results will follow.
Okay, what exactly are you hoping to sell off their assets? In the beginning, sir, when the fraud came to light, there was talk about selling off the stock of jewelry and jewels that was, perhaps lying in some of their warehouses. Is anything happening on that front, sir?
Now, all these assets are under the custody of the Enforcement Directorate. However, we have lodged our claim with the Enforcement Directorate since on those assets we have our lien. And once the case is settled, I think we are hopeful of getting amount from that.
Okay, is the lien very clearly with PNB? Are there conflicting, very often we've seen in cases like say Vijay Mallya, etc., that there are conflicting demands even on those assets which are being auctioned, etc. Is it clear that PNB has first charge, sir?
Along with PNB, other consortium member banks will also have the charge.
Okay. Sir, talk to us a little bit about the NPA build-up. Slippages were lower this quarter. In the next 2 quarters, what would you expect things to shape up as, particularly in the September quarter, because everybody is worried what happens to the accounts which went into the SMA accounts after the RBI's Feb 12 circular. People are worried that the September quarter is when that hit will come through.
If you see our slippages during the current quarter, the fresh slippages is around 5,250 crores. Same thing if you see in the March, it is around 30,000 crores. And in the last June 2017, it was around 6,200 crores. So slippages we have controlled to a larger extent. And in the September, we don't see any surprises. And since each and every account is under our radar, the slippages will be under control only. And second thing is, as per the RBI circular, whatever the accounts are going to be slipped, we have adequately provided, and those accounts have been accounted for. So September quarter will be as per our estimations, and we are working for that.
Can you tell us, sir, what is the proportion, the number in the SMA2 category or the SMA1 category right now?
Yeah. If you see our restructured accounts, in March, it is around 5,100 crores, whereas today it is around 4,000 crores. And these are the restructured accounts, which you call it as stressed accounts.
No, so I meant SMA accounts, not necessarily the restructured, the ones that are 30 days overdue or 60 days overdue, which could then potentially go into 90 days overdue.
Yeah. Exactly. SMA1 and SMA2, this is basically a dynamic figure. The figure which is there yesterday, today it will be rectified. Most of the things will be recovered, followed up. So if you take on an average basis, it will be hovering around 8,000 crores to 9,000 crores.
In SMA 1 and 2 together?
Yeah.
Okay. Sir, also power assets, what is your exposure to power assets in particular? Again, worries that some of the large power assets will have to go get marked down into NPAs, and that would be a hit?
Our exposure is around 24,000 crores in power, and most of the accounts where resolution has to be done, it is there. And the other thing, around 13 accounts, it is under process where there is time. And we see not much heat in those accounts because we are hopeful of resolutions in those accounts.
So there's no sign of those resolutions. I think even the plans that the banks have come up with, to resolve power assets, there's no sense of progress there, sir. How are we saying that you don't expect those to go into NPA?
See, here, if you see as on date, the banker, the government and the committees all are working very seriously to resolve these accounts. Because now everyone is interested in these accounts to get some resolution. Though resolution will come, it is not like that previously there was no resolutions.
Okay. So tell us a little bit about your capital position. You've gotten, some additional capital from the government. What do you think will be the capital need for the full financial year? What is the estimate of internal generation of capital, sir?
Yeah, if you see our capital position, one thing is in the current quarter, government has given us around 2,816 crores as capital. Apart from that, if you see the management of the risk-weighted assets, we have reduced our risk-weighted assets by around 40,000 crores. So automatically, it also contributed to increasing our CRAR ratios. Apart from this, we are selling our non-core assets, which will also contribute to our profit. And apart from that, ESPS scheme is already being approved by the board of our bank, and RBI has given us permission, and any day we'll be getting the permission from the government of India, wherein we'll be raising around 1,000 crores from our employees, own employees. So apart from this, the way in which we are doing the recovery and the way in which we are managing the risk-weighted assets, I think capital will not be an issue for us. And apart from this, we have also requested the government for growth capital, we need around 5,500 crores from the government.
How close are you to closing the PNB housing finance deal, sir? How soon will we see that fructify, and any estimates if you are willing to share?
Yeah, if you see, it is already in the media that we have already called the expression of interest, and by 25th or 27th of this month, the 30 days time which we are given will be completing, and we'll be getting the expression of interest offers. After that, we'll be taking a call, but we are serious to see that this particular deal is completed before this end of this financial year.
End of this financial year, but it may not help in the next quarter, sir?
Yeah.
Okay. What about
as of now, we cannot tell, but plan is there.
Okay, okay. What about the other subsidiaries, sir, where you think you can monetize? You spoke about MetLife, I believe, in the press conference.
Yeah, MetLife also will be disposing of around 4% of our share. I think it may be completed in the current quarter or the next quarter. And apart from this, already we have sold around 167 crores worth of our non-core assets during the current quarter. And these two we are planning to dispose it of, so that around 8,500 crores we are planning to raise from the non-core assets sale.
Okay. So just last question or last issue. What is your lending strategy right now? Who are you lending to? Who are you not lending to in order to keep risk under control? And then what are the implications for your margins as you shift to your lending mix?
Yeah, if you see, our domestic credit growth during the current quarter is 10.6%. So that itself shows that we are in the market and we are lending. And simultaneously, if you see the RWA density compared to the last quarter, from 65% it has gone down to 55%. That clearly indicates that our exposure is being shifted to low risk assets. Basically, either it is government guaranteed accounts or AAA accounts or AA accounts or A accounts. So our lending will continue, but on a selective basis, and wherever requirement is there for the entrepreneurs, we are there to lend.
But will your margins then fall, sir?
If you see our NIM, it is at 2.90, which you can say one of the appreciable NIMs in the industry.
Okay, but I'm just saying that if you're shifting towards, more sort of risk-averse lending, AAA, etc., where the NIMs may be lower, will that impact you?
I cannot say it will impact to a larger extent. Yes, with the management of proper management of our funds and lending to the borrowers in a balanced way, concentrating more on low risk assets. Well, I think we will be in a position to maintain our NIM around 2.8 to 3%.
What was your deposit growth, sir, and particularly CASA deposits? How did they move quarter on quarter?
Yeah, if you see our savings and deposit growth, everyone has thought that because of this unfortunate incidents, people may not be comfortable in depositing. But if you see our savings bank deposit, it has grown by 10,000 crores, and it is around 4.5% growth is there. That itself shows that people have still confidence on us, and even after this incident, we are getting more and more saving bank deposits.
Okay, sir. Thank you so much for taking all of our questions. Appreciate you giving time to Bloomberg.
Thank you, ma'am.
Tossing it back to you in the studio, Neeraj.
Well, thanks a lot for that, Ida. Thanks for taking us through that. That's Punjab National Bank talking about the numbers and the outlook ahead. Okay, let's focus on some other companies before we get to the market guess. Dilip Buildcon has emerged as the lowest bidder for a tender floated by Punjab State Power Corporation for 32,000 crores in Jharkhand. Let's discuss this in detail with the management. Joining us now on the phone line is Head of Strategy and Planning, Rohan Suryavanshi. Rohan, good having you. Thanks so much for joining in. One, if you can explain the nature of the order, 32,000 crores seems a very large number. And two, from whatever little I understand about your company, you're a road construction company. What is this power stroke coal mining foray that you're doing?
Hi, Neeraj. First of all, thank you for having me on your show.
Pleasure.
So, the project that we won today is basically, like you rightly pointed out, it's given out by the Punjab State Power Corporation Limited, and it's in the state of Jharkhand. It's basically developing a coal block and owning it, basically running it for the next 55 years. So we will be excavating coal from this mine and supplying it to the government of Punjab at a predetermined rate. The rate at which we won it is about 840 rupees per metric ton that we'll initially start supplying it. And then every year, as it goes on, there will be escalation clauses in it as well. And this is excluding of GST, the rates that I'm talking about. So the whole project type is known as an MDO, Mine Development and Operation. Basically, when the Supreme Court cancelled out mines that had been awarded earlier, the central government allocated different mines to each different state to meet their state utility power, companies' input demands. So this will be going in used by the state of Punjab to run their own power plants. What we have to do in this project is essentially excavate this coal, give it to a railway siding which is at 55 kilometers away from the mine, and from there onwards, the Punjab government takes care of it. Now, like the second part of the question which you asked was, how come we forayed into it? Now, mining is something that we forayed about a couple of years ago, and even then our stated intent was we started with overburden removal, and our stated intent at that time was that we want to eventually get into MDO, get to a larger picture. That was the idea. Now, what a project like this does to us is Dilip Buildcon is known for running its own equipment and having people on its rolls. So a project like this gives us a visibility for the next 55 years, where we don't have to worry about going and running for new projects, unlike in a typical road project where after 2 years you need to find another project where you will redeploy equipment, where you will redeploy your manpower. Here you have one singular place that you have to work at. You don't have to keep on worrying about securing licenses every year or for every project, which is the case in any other road project or anything.
Right.
So that was the thought process when we won this, when we first forayed into the sector, and we've done very well in the sector.
Okay, so Rohan, just one quick question. I understand you have a meeting too. What would be, would the annual revenue numbers from this would be what, 32,000 divided by whatever number of years that it's spread out for? That's part one of my question. Part two of my question is, I believe this is in partnership, if I'm not wrong, with VPR Mining Infra, if I'm not wrong?
Yes, absolutely.
And that's a politically affiliated firm. Is there a risk of fallout for a partnership like this? I believe that company belongs to Amirreddy Prabhakar Reddy, I believe a member of the YSR Congress party as well.
Oh, well, first let me answer the first part of the question. Number one, like you said, it's a 32,000 crore contract. This, even for the first year when we first start mining, we should, base case scenario of mining for a full year should be about 600 crores of revenue per year, and which will have then escalation clauses and also the GST on top of it. So that's around the base case scenario for revenue per year, and the 32,000 crore amount that we're stating right now is the amount in today's money terms. This will keep on increasing as every year the escalation clause keeps on increasing. Now, coming to the second part, the VPR mining firm. VPR is a very well-known, established name in the mining industry. What perception it may have and what the promoters' affiliations are, that does not really matter to us because it's a central government allocated coal block. We are only working with a mining with any company based on what they bring to the table. Now, why we first formed this joint venture was because DBL as a company does not have the necessary experience to work in this sector. So we needed to have a joint venture partner so that we can have the necessary qualifications to do that. Now, coming to their execution capabilities of VPR has been very, very well established. They've been, they've been in the sector for a while. They understand the sector. They understand the challenges of the sector. And we looked at their operations. So they were someone whose operations were which impressed us in the way that they were doing things.
Right.
So we decided to partner with them. And along with this, we've also partnered with other mining companies in India. So whoever does a good job, irrespective of whatever perception they have or not, we work on that.
No, I'm sure the execution capability was never a doubt, Rohan. I'm sure you would have checked the credentials before joining hands there. The only question mark was the political affiliations and if such things tend to result in problems later on. But I take your word for it. Thank you so much for joining in. Congratulations on the order. All the best for the new foray.
Thank you very much, guys.
That's Dilip Buildcon. They're confident about this not impacting them too much. But a construction company into mining, I don't think the market is looked too excited with this. Our guests join us, and I know our technical experts are with us as well, but I wonder if Gurmeet Chadha is with us, because if he is, I just want to start off this small conversation with him on Dilip Buildcon before I get to the other specific conversations with Amar Singh and the others. Gurmeet, thanks so much for joining in, and thanks for taking the time out. I don't know if you got a chance to hear, but here's a company which is deeply entrenched into road construction, very well known for that. In fact, revered for that. They get some high multiples, save for the last few quarters wherein they got into ASM and a few other issues. But that notwithstanding, foraying into mining in a meaningful way, such large orders also then failing to evoke any interest. What do you make of this move, and what kind of impact could it have on the stock? Positive, neutral, whatever?
Thanks, Neeraj, for having me. I think Dilip Buildcon, Dilip Buildcon is, as you rightly said, has a very good track record, both in terms of execution and growing the order book. I think this is a new foray in this, and as I was hearing that this is more of a capital plus revenue receipt model, where the life of the contract will also ensure that the regular. So I think the market will try and make some sense of it as time goes by. From the face of it, looks good, but obviously the market isn't too excited and the stock is down about 2.5%. But more importantly, as I've been mentioning, Neeraj, is that anything where the market is circumspect on political affiliations, auditor issues, corporate governance, I think it will react and wait for the information to be fully processed. And we have seen with so many cases, we have seen such good results come. Almost 70% of the results have been in line with the estimates, but it hasn't really necessarily translated to a jump in the immediate stock price, because the valuations are rich. The market is trading at a very rich valuation, and what it is more keen on is on the sustainability of the earnings and the sustainability of growth. Wherever they see that, in some of the counters we have seen, whether it is Lever and some of the others, they do reward the result. Otherwise, it's used to do some profit booking.
Okay, that's the view coming in on Dilip Buildcon. The stock did come outside the ambit of ASM, which one saw, but still there were rallies seen only for a few days, and the stock is back under pressure. But let's bring in our technical experts. We're joined by Amar Singh, and also joining us on the show is Sacchitanand Uttekar of Tradebulls. Good afternoon to both of you. Sacchitanand, let me come to you first. At every correction above the mark of 12,400, I think it will be pertinent to call it profit booking than correction. There's some buying which is emerging at lower levels. What should one do with the headline indices Nifty and Bank Nifty?
Is that okay?
And when we spoke, when we talked about a probable target of around 11,450, and this could be one zone wherein the markets could see a climax move or a termination. So if you look at the relative strength of the market since the way Nifty breached above 11,150, which was the previous swing high, which was established in the month of January. If you look at the RSI placement on the monthly scale, the RSI was quoting somewhere close to 75.46. And if you look at last month, wherein the market closed on a very strong note, the RSI value on the monthly scale is still at 70. So if you look at the entire picture, there is clear evidence that the market is losing its strength. Even if you look at the last couple of trading sessions, the momentum has been drying out. So probably we may see a termination of this particular move that got initiated somewhere close to 11,100, and what we are expecting is that the market is nearing a probable top, and that's why it is good to be on the short side rather than creating any long positions from here on. So with that perspective, what we are recommending is to deploy a bear put spread in Nifty, wherein the recommendation is to buy 11,000 put option and sell 11,100 put option on the contrary. The combined spread is available somewhere close to 75. A spread stop loss can be placed at around 38, and an expectation of a move towards 11,100 and beyond could fetch a sizable gain of around 225 points roughly during this particular expiry. So clearly, this is a sign wherein the market should form a probable top, and we may see a substantial correction going forward.
Interesting. Amar, how are you approaching this?
Yeah, I would say that the overall trend definitely remains positive and up, and technically looking at the charts, we've seen some loss of strength in terms of the upside, but overall the trend remains positive. So I would still give the benefit of doubt to the market, and any dip can be used as a buying opportunity. Yes, not at the current levels, but any pullback towards 11,320, 330, that can be a good level to buy with the stop loss below 11,270 and a target of 11,395, 11,400 on the upside.
What about stocks? Amar, let's start off with your ideas for the afternoon.
I would say the first one is Yes Bank. If you look at Yes Bank, what we are witnessing in Yes Bank is that Yes Bank managed to pull off very well from almost 350, 360 levels. And technically, it continues to remain strong on the long-term charts. It did witness some correction, but that has, I would say, passed, and the stock is in an uptrend. So one can look at buying Yes Bank in the range of 382.84 with a stop loss of 374 and a target of 401 on the upside. And the second stock to look at is Titan. What we are witnessing in Titan is that Titan also had gone into consolidation, witnessed some profit booking from higher levels. If you talk about the levels from almost 944, 45 levels, it has corrected. But the trend still remains up. So any pullback can be used as a buying opportunity in Titan. So ideally, the good level to enter Titan is around 908, 910 levels with a stop loss of 891 and a target of 945 in the short term.
Okay, Sacchitanand, what about your topics when it comes to individual stocks?
Well, we have two, in fact, one on the short side and one on the long side. On the long side, the way some of the cement counters are performing, probably we may see this particular rally getting continued in something like Grasim, which can be bought from a momentum perspective. A stop loss can be placed around 1,013, and an immediate move towards 1,055, which is its 200-day exponential moving average, could be achieved. On the short side, we are getting ready for a move or a negative move in Reliance. So if you look at this particular stock itself, this was one of the strongest stocks if you compare from the outperformance perspective towards the Nifty. Even on the similar study, we have seen that the relative strength of Reliance is getting weak, and probably this juncture of around 1,200 could be capped on the upside, and the market and the stock could again start a fresh corrective move from here on. So with that perspective, again a bear put spread can be initiated in Reliance, wherein 1180 put options should be bought and one lot of 1100 put should be sold. The combined spread for this particular strategy is around 17. A stop loss can be placed around 9, and a probable target of around 60 can be expected during this expiry.
Okay, those are the top calls coming in. TVS numbers had come out a while back. Pull up the stock. I think that's sitting at days high, and there was a lot of trading activity that was taking place there. After the numbers, there was an initial blip, which we did get to see. But right now, the stock's sitting with gains of 5%. Remember, the margins came in just in line with what the street was estimating at about 7.4 versus 6.2, which was seen in the corresponding quarter. Gurmeet, a lot of earnings from the auto pack today from the likes of TVS Motors, M&M, a very strong volume growth also seen for that one, and also something like Motherson, Sumi. What did you make of these numbers so far?
Hi, Naveen. I think I've been very positive on auto, both on auto components and two-wheelers, passenger vehicles, and the entire pack, the CVs and the passenger vehicles both. I think as I was telling that, we are seeing good volume growth. There's a recent survey which few of the firms have done on the rural economy. There is a lot of liquidity, which is reflected in both two-wheeler numbers and tractor sales. So pretty positive on the auto pack. As I said, I am more positive on auto components and OEMs because for two reasons. One is the operating leverage will hit the auto component makers first because their capex happens with a lag. Also, what we are seeing is that the per component usage is going up. So there is a volume growth of 12 to 14%. Let's say something like a Minda Industries, which is into switching, lighting, horns, rims. So what we are seeing is the volume growth of 12%, the industry growing there, and per component usage in the car picking up by 3 to 4%. As more variants come in, car makers and vehicle makers want to give more features, which will add to a volume growth of 15 to 18%. So very, very positive on the pack, including M&M, Maruti, Minda, and some of the other names.
Interesting. Gurmeet, so I take on board Minda, and I think we've had a conversation around Minda Industries in the past as well. Another name that you like, which has got me intrigued, is Blue Star. Now, why a cooling solutions company at a time when Symphony's numbers have shown that almost all cooling solution companies are just so are subject to such an intense way to the vagaries of monsoon that it might be difficult to assign a higher P multiple to these companies. So why are you choosing a Blue Star?
Neeraj, two reasons. As I said, while I agree with you, see, it's always said that, monsoon and off seasons and price wars are the best time to pick up quality names. And I agree with you, on the valuations. My broader principle has been that, the penetration of air conditioning, has been very, very low. We are hardly at about 6%. And we do not have enough listed players which are pure cooling and air conditioning name to play this theme, and I think and I like Blue Star because of that. The other thing what we are seeing is speaking to a lot of dealers is the rotation, which we call. So the working capital blockage, the inventory, which is if you add primary and secondary numbers, see, a lot of times the numbers we see are only primary numbers which companies supply. We are seeing a very, very good secondary sales as well. And so you're not, if you go to if you go to a tier 2 town and you speak to a lot of dealers and distributors, unlike in the past where their working capital was blocked and they were using bank limits, this time it's much less. The rotation is much quicker. So I'm seeing a lot of on-ground movement, and that's why the valuation premium will continue, and that's why the liking for Blue Star.
Okay. I think the metal stocks have gone up. Let's just pull up the Nifty Metals Index now. It's the top sectoral gainer. Start of the show, we did highlight NMDC for you. Nifty Metals, it's just come off, but there was a bit of recovery owing to stocks like Tata Steel, NMDC, and also Jindal Steel and Power. All three of them, I believe, are now currently sitting at days high. Tata Steel almost up 3.3%. NMDC is also up in trade and 3% higher for something like a JSPL as well. NMDC definitely comes out with the numbers tomorrow, but remember the iron ore prices in the international market have been inching higher. I don't know if that's also got a role to play with the move that we are seeing. Gurmeet, I'm just going back to your picks first. You're also bullish on the niche sector, that's the AMC space, which is largely underpenetrated in a country like India. We had a bumper listing coming up from HDFC AMC. Valuations now are at sky high, but tell us, do you also like something like Reliance Nippon? And given an option, Gurmeet, now that the listing was higher than what even the street was estimating, which is the stock that you would choose now?
Namit, I'll go for both. I tell you something fundamental. I think we are placing too much emphasis on the valuation, which you call it price to book value, or let's say 10% of the assets HDFC manage. My assumption is that the volume will pick up. The book will go up disproportionately. And if you see, and I'll just throw you some numbers. If you see today, we are at about 23 lakh crores as an industry, and bank deposits is 95 lakh crores. In any developed nation, this ratio will be 2x, 3x in favor of mutual funds. Also, if you see the number of insurance policies in India is about 35 crore. and mutual fund unique folios are about sub 6 crores. So I think I see AUMs growing 20-25%, and more importantly, I see margins growing much more than that, because as a lot of digital initiatives kick in, somebody like SDFC and Reliance have a lot of aging on the assets, and when assets age, the payout in terms of distribution commission, in terms of other expenses, is much lower. So also, if you see the SIP book today, so let's say between Reliance and SDFC, the SIP book would be roughly about 25 to 28% of the industry. Now that you're talking about 30,000 crores additional assets coming in an autopilot way. So what it will do is that, let's say pick up a scheme, for example, a balance fund of SDFC, which is 40,000 crores of assets, just one scheme. And if you take a 50 bips kind of a margin here and there, you have a 200 crore gross bottom line on one scheme. So that the AMC entire profitability pool is only about 1,800 crores. My sense is this entire industry profitability pool will go up 2x, 3x in next 3 to 4 years for the reasons I've highlighted. So I like both. In fact, if there is more listing, I think there is UTI lined up this year. There could be few more. I think this entire space looks very, very exciting to me.
Okay. Gurmeet, final question from my end. Any thoughts on stocks which are doing rather well today? I'm just picking them up off the list of 52-week highs. But Intellect Design is up 14.5. VIP, after very robust commentary, is up about 5% yet again. And Delta Corp has been setting the stage on fire the last few days, up another 2.5% today.
Yeah. So, as I said, I'm very, very happy for the fact that, the market has been very, very polarized. And I'll just spend a minute on it, because if you see today, the median correction from the 52-week high of stocks which are between 100 to 250 by market cap is roughly about 20%. And if you go beyond 250, the correction is probably more than 30%. So as I've been repeating, it's a great time to pick, and on the names you took are very, very quality names. In fact, if you see the companies between 250 to 850 market cap, there are about 300 companies where the PAT is around 100 crores. And 90% of the money is only chasing the top 150 stocks. So I think there is a great opportunity over next 2-3 months to build these portfolios, which will have the likes of, I'm very, very positive on VIP. Another name which you did not take, I'm extremely positive is pressure cookers, which is Hawkins. Just a 10 crore kind of a PAT. And with the kind of LPG connections we have distributed, I think this PAT can, I don't know how many times it can go up. So there is a great opportunity, provided you have patience. You build it up over a 3 to 4 month period. Don't get too much carried away by the these sharp listings and movements. You will get your play, if you're patient.
Well, Gurmeet, some of these stocks have been entering the ASM, for example, VIP in today's session. That's locked in upper circuit, but remember, it's gone into ASM. I appreciate you joining us today and taking us through your views, and also sharing your fundamental picks with our viewers. Have a good day, Gurmeet.
Thank you so much.
All right, 7 points higher for Nifty. Time for us to slip into a short break, but hear out Harsha Upadhyay of Kotak Mahindra AMC on how he rates the earnings season so far and why he prefers the IT sector in the current scenario.
I think if you look at the aggregate numbers as of now from the companies that have announced results until now, it's been a very muted quarter in that sense. The profitability has grown at about 6.7% for Nifty from the companies that have announced earnings until now, which is way below what the market was expecting for the full year. So to that extent, I would say that there is a case for earnings to get downgraded once again post earnings season. And some of the analysts have already downgraded their numbers for full year financial year 19. As far as the market is concerned, the market is kind of shrugging off all these worries. Not only earnings worries, but there are also macro headwinds, challenges that are in front of us in terms of volatility in currency, the way the crude has firmed up, the way interest rates have moved up, not only in India, but globally. So there are various negative challenges in front of us, but still, given the kind of money flow that we are seeing in the domestic retail segment, the market seem to have shrugged all this and continue to move up, at least at the index level, while the story is quite different when you look at the broader market or mid-cap or small-cap segment.
Right. You know, post the carnage of late that we'd seen in the mid-cap space, while now you've seen stocks actually moving up, but at a time where only the frontliners and the heavyweights were lifting the index higher, you had a lot of expert opinion which suggested to probably stay out of, you know, the mid-caps and small caps and only look at the quality large cap with good earnings potential. Is that something that you stand by too? I mean, or there are stories in the mid-cap space which still look good to you?
Devina, I don't think that's an easy answer to reply because if you look at large caps, they are not any more attractive in terms of valuations as compared to where they were at the beginning of the year, for example. Similarly, while the mid and small caps have fallen from the peak levels, even today they are well above their average valuations when you compare it to their own history. So to that extent, it's not been a clear case of whether it's large caps or mid caps at this point of time. I think in both cases, there are different kinds of risks that are there. And one has to be more stock specific in both the segments to construct a portfolio that will weather this volatile period and also give you wealth over the next 3-5 years.
Dreamers, they're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you, when you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. Just half an hour to go for markets to shut shop, and looks like we're just going to be bracing ourselves for a flat closing today. Nifty has just been gyrating 20 to 30 points in trade. So right now, just about at levels of 11,396. Bank Nifty is above the mark of 27,900. Let's quickly pull up the European market indices and check what's happening there. I think it's been a strong start there. FTSE is up 0.7%. The German index, DAX, is doing pretty well, and also you've got CAC sitting with good amount of gains. But back home, Motherson Sumi has reported a 50% jump in its June quarter profits, with margins expanding to almost 10%. Well, Yash Upadhyay connected with the chairman Vivek, Chaand, Sehgal to get a fine print of the earnings, and for the quarter gone by, he started asking on the outlook going ahead. Listen in.
Just to give you a context, in the last 3 years since we announced our 2020 target, we have set up 27 new facilities across 9 countries. So that kind of tells you the kind of growth that we are seeing with the car makers globally and in India itself. In fact, 8 of these plants are in India. So definitely we are ready for double-digit, even triple-digit growth if it takes place as far as India is concerned. Yes, we are very excited. The revenues are up 22%. But globally, EBITDA is up 24%, PBT is up 32%, and PAT, of course, is up 57%. So that's a great story.
Well, right, sir. But also your PKC business, how are you seeing the opportunities there, and which are the geographies that are driving the growth?
So I think basically the 2 main protagonists of PKC growth is definitely the USA and China, from where almost they derive, both put together, they drive about 60–65% of their revenues coming from there. That is growing very well. The great story about PKC is how the EBITDA and the PBT and the PAT concern share has also grown. So they're doing phenomenally well. The growth is good. We can see some very, very positive changes in PKC. The same is the story with MWSI as well, the Stonebridge wiring harness company that we have taken over in US. So we can see some good numbers coming from them, great adherence to the Motherson way of producing wiring harnesses. I think it's a very, very successful story thanks to the hard work of all the people.
And so when it comes to margins, what is the outlook for the SMP and the SMR units? And is there a further upside to margins in these 2 segments?
So we never guide you on margins. We give you a guidance on ROCE. Definitely there's a huge improvement in the ROCE that is coming in all the segments of Motherson businesses. SMR and SMP also, as the last of their new plants come into fructation, you will see that their ROCE will also start to improve. And our target is that by 2020, we have to cross the gate of 40% ROCE for Motherson Sumi, not individually. Individually, some would be more, some would be a little less.
So, sir, you have various expansion plans lined up. If you could give us an update with respect to the timelines by when will they get commissioned, and how will it contribute to your top line? Any ballpark figure that we could work with?
Okay. You see, the differential between our plants and the normal plants that you imagine, we don't have an on-off system that we will hit 80% of our revenues coming right in the day 1 or something like that. These are all projects which are this ramp up. So it starts with something like 10 cars a day, then go up to 100 cars and 500 cars, 1,000 cars per day, and it takes a bit of a time. Then also there are many variables, many models, many new, you have 2-door cars, 3-door car, 4-door car, 5-door cars. So all those particular things are happening, and each one has its own ramping up. So it's very difficult to try to explain which plant will come into fructation 100% when. But by and large, 2019, we see a great ramp up of almost all our plants which are there. This time we have given you the inauguration of the Tuscaloosa plant. There are multiple new plants that have already been started. They are all ramping up slowly. Also, to give you an idea, in the last 3 years, 27 new facilities of Motherson globally have been announced. That's almost 9 plants every year. So to give you that, the growth that we are talking about, to go from 5.5 to 18 billion, you need greenfield also, you need acquisition also. So it's a very exciting part of Motherson, the growth.
Well, and maybe that's the trend that will continue. That's Vivek, Chaand, Sehgal. And as usual, fairly confident about what will happen in the business going ahead. Let's talk just about lumbering along. I think Motherson Sumi, except for sporadic moves in the last couple of years, hasn't really gone out there and created big wealth. But it's a large company. The targets are set. Let's see if they manage to do that. For now, down about 3% in trade today. Actually, coming on that, Sacchitanand, Motherson, Sumi, a couple of these other auto component names which are looking slightly soft. But let's start off with Motherson, Sumi, because that is down about 3%. Would you trade it?
Well, I think the trading bet should be more on the short side. So if you look at the overall structure on the weekly scale, the stock is making a low top, low bottom formation. Even in the recent history, if you look at the way it moved towards say 320, it never sustained above its 200 exponential moving average. And again today, we have almost seen engulfing bearish kind of a candlestick formation. Again, reiterating the fact that the stock could head lower towards say 290, 282 kind of a zone. So probably on the short side, one can deploy, trades, keeping a stop loss somewhere close to 320 on a closing basis, with an expectation of a move towards say 280 to 290.
Okay, that's a sell call coming in from Sacchitanand and Motherson Sumi, which is sitting with cuts of almost 3%. But let's also find out which are the Fab 4 stocks of the day. And to take us through that, today Agam Vakil joins us. Hi, Agam.
Hi, Navneet. So I have a bunch of stocks on my list at this point in time. Let's start off with Intellect Design Arena. It signed a multi-billion-dollar deal with a leading Asian bank. We don't have more details on it, but on the back of that, we are seeing substantial strength as far as the Intellect Design Arena goes. TVS Motor Company, of course, earnings are through. We've seen an expansion in margins, even though there has been a miss when it comes to the top line or the bottom line. Well, traders are going ahead and buying it, and this is likely on the back of expansion in margins coming through. Parag Milk Foods is the other one where we've seen 33% growth on its top line and well over 160% growth on the bottom line, on the back of which there has been more buying coming through. And finally, we have TNPL, that's Tamil Nadu Newsprint. We've been talking about this over the previous few days. In fact, we've been addressing the paper industry as a whole. And this time, we have Investec, where it's just initiated with a price target of 431. As you can see, a good 100 points away from that price target, and that's possibly the reason why you're seeing strength in that counter too.
Interesting. Agam, thanks for putting all of these into perspective. Can I take up a couple of these stocks with you, Amar? One of them was TNPL, if I'm not wrong. But the other one that I really wanted to talk about was Intellect Design Arena, up 16%. What do the charts indicate about the levels that these stocks could nudge?
Yeah, looking at Intellect Design, what we are witnessing is that the stock definitely has rallied significantly today. It's up by almost 15%. And if I look at the long-term charts, I'm looking at the long-term charts. So in that case, it clearly reflects that on the upside, 260.64, that was a high that was made in 2016. So the stock could reach those levels because the stock is definitely strong on the long-term as well as the intermediate-term charts. So the upside, I would say 250 to 260, that could be a level where the stock could reach out to.
Okay, that's Intellect Design. This year itself, the stock's up nearly 42% in trade, but we were highlighting the metal stocks which have gone up, and one of them being NMDC. Sacchitanand, with a 6% move today, would you take a fresh bet on at 114 levels?
Well, certainly not an NMDC, but the way some of the metal stocks are performing, I think JSW Steel still has some room on the upside. It is quoting somewhere close to 340 right now. We have already seen a good swing low somewhere close to 336, which should be the stop loss for the trade, and a move towards say 345, 347, could be expected. So from a BTRC perspective, I think JSW Steel looks like a good idea.
Okay. Well, the metal companies, by and large, I wouldn't call them flattish. In fact, in today's session, frankly, banks would have been a bit of a disappointment, but aside of that, metals are ruling the roost. Tata Steel is up about 3.5%. There is gains for a couple of these base metal companies, and steel companies by and large seem to be doing rather well for themselves. Nipun Mehta, market expert, joins us right now on the show with his thoughts. Nipun, good having you. Thanks so much for joining in. I remember maybe a conversation 2.5 months back about the ferrous and the non-ferrous space with you, but times were slightly different then. Times are slightly different now, Nipun. Stocks have come off a bit as well. The world scenario has changed quite dramatically, more trade tensions too. Would you go out and buy, or invest rather, not buy really, but invest into any of the commodity names, whether base metals, whether the others?
Good afternoon, Neeraj. Yeah, I think absolutely right on the fact that to a degree that uncertainty on the ferrous as well as non-ferrous metal space has increased a bit. The uncertainty given the trade war scenario that is there. Our sense is there would be that degree of pricing pressure that would be there because of that. For some more time, there could be a demand issue as well. But our sense is, as you asked, when one is looking at investing in this space, one would continue to look at investing. I think given the kind of demand-supply mismatch that is there, given the kind of capacity reduction that China has undertaken, and across, if you really see whether it is ferrous or non-ferrous metals. Also, given the kind of a degree of consolidation that is happening globally, that's something, again, further which is going to ensure that the demand-supply mismatch would remain, and the pricing power that most of these companies have currently is something that could be maintained. So when you look at the kind of acquisition that happened or consolidation that has happened within the industry, the long-term pricing power definitely seems to be there. So we would definitely be positive on this entire space given a 2 to 3 year time frame as well.
Okay. 3:10, the time of the show when we talk about what is lined up to come in. Nipun, stay on. We'll just get back to you. But it's that time of the show when we talk about stocks that could enter or come out of the ban and get in what dealing rooms are recommending in the session today as well. So important conversations to have. Start off with what could enter the ban or come out of the ban. Navneet, is there a long list?
Not really, Neeraj, but a stock which has fallen after its numbers, and that's Punjab National Bank. There's a lot of open interest accumulation that's taking place post the earnings today. In fact, yesterday itself, I believe it had reached almost a 90% mark, the total open interest as a percentage of MWPL. Look at the stock. It's currently at day's low now with cuts of 8%. And if you go by today's action, both on the futures and a lot of option activity taking place on the call as well as put side. So if you add the open interest, which is added on both futures as well as option, Neeraj, it looks like it will cross the 95% mark, and it is likely to enter into the ban period for tomorrow's trade.
8% down in the session. Thanks for that, Navneet. Sacchitanand, if this were to happen to Punjab National Bank, does that change the trade pattern in any way? For now, it is down. There is some bit of OI build-up, but a possibility that it could be in the ban tomorrow.
Well, I think the trend has been substantially weak. In fact, even if you look at the recent history, of most of the PSU banks, they have given a good amount of return even on the short-term books. But if you look at PNB, 90, 88 has been a hurdle, and I think even in today's session, this particular hurdle is holding strong. On the lower side, we are seeing that the stock should again tilt down towards the 76 and probably may see sub-levels as well. So yes, in fact, we are expecting that this particular momentum, which has just been triggered, could be carried forward. Though the positions are very heavy right now, but I think overall a lot of delivery, is still stuck with some of the clients, and probably we may see a good amount of exits in this particular counter. So I think the pressure may continue from here on. 88.90 still remains a very strong hurdle for the stock. On the lower side, expect 76, 75 levels very soon.
Okay, interesting. So do watch out for PNB. Nipun, I'm not asking you for a buy or a sell recommendation, but if you saw the numbers of some of the PSU banks and PNB in particular, what do you make of it?
Well, Neeraj, one thing is seems to be, or 2 or 3 things seem obvious. One is the fact that there have been now expectations for the last couple of quarters that the NPA provisioning would reduce substantially. Well, the provisioning seems to be going down, but in a very gradual manner. Probably the next few quarters still will see some degree of NPAs continuing and the books and the P&Ls getting reflected across the PSU banking space. The second is probably the expectation that recoveries would be much better starting FY19. We haven't really seen that happening. I think it's coming in really slow. Recoveries across various sectors, while there is talk of a lot of the sectors doing much better and recoveries happening for the PSU banks, that still doesn't reflect. So I think the problem still continues as far as PSU banking space is concerned. The re-rating that was anticipated or that could have happened if the provisioning across the entire space had sharply reduced is unlikely to happen, maybe at least for the next few quarters. So cautious as far as PSU banks are concerned. They have had a short-term run-up, but till there is that clear U-shaped recovery that is there, and it's unlikely to be a V-shaped recovery. So till such thing happens, we would still be cautious on the PSU banking space.
Well, clearly, it looks like the fresh slippages number, which was reported of 5250, is something which the street has not taken down well. Bank of India also down 2.5% in trade. But 3:15, that time of the show, when we tell you what the dealing rooms are recommending in trade, and to take us through the same, Darshan Mehta is here with us. Hi, Darshan.
Hi, Navneet. One of the stocks that's been actively spoken about today, steel as a package doing well. JSPL is one of the counters which is up almost 3.5% in trade. While most of the commodities have been rather subdued, steel prices in Shanghai have been rising. It's up almost 2% in trade, 2% up steel prices. So on the back of that, technically also looks very, very strong. So dealers are talking about JSPL. The other counter in which dealers are talking about is Just Dial. It's up almost 1%, but dealers indicate a large domestic mutual fund has been actively accumulating Just Dial, so that's something that dealers are watching out for. And the stock, last stock is Tata Chemicals. The counter is down, no doubt, 3.5%, but there's a buzz of a potential corporate announcement that could come in. That's been spoken about in a lot of dealing rooms, so that's something that we will be watching out for.
Okay, we'll watch out for that. The buzz of a corporate announcement in Tata Chemicals, amongst other things that Darshan is hearing in from his dealing room sources. Thanks a lot for that, Darshan. Appreciate. Well, specialty chemicals on a bit of a roll. Remember, Darshan yesterday had spoken about Deepak Nitrite and the fact that HNIs are looking at this stock because of the new plant. That stock is up 7% today at 266 or 267. So that check was right on the button. Watch out for Tata Chemicals today. But, you know, we're seeing this traction now happening in select specialty chemical names. Deepak Nitrite because of the new plant that comes up on stream for them. Vinati Organics, we just spoke to the management at 2. A big move yesterday, 20% up, another 1.5% today. Again, the sales for the last 2 quarters have been robust because of specific benefits that come to that company on their product. After a while, I'm seeing a bit of a comeback, Nipun, that the chemical stroke specialty chemical space is making. I was surprised when Nocil got punished the way it did despite a good quarter and thought maybe the sentiment is sour, but the movement in Deepak Nitrite, the movement in Vinati Organics seems to suggest that the market is sanguine about this space. What are your thoughts here?
Well, Neeraj, I think for a start, most of these companies are in the small cap and mid cap space. And given the fact that the last 2 quarters have been bad for the mid cap and small cap space, the specialty chemical space also has got very badly hit. So you've seen significant erosion happening. I wouldn't say as bad as a lot of the other small caps have had, because the quarterly results have continued to remain good. The growth has been there. You look at virtually the entire space, rubber chemicals, other specialty chemicals, agri-chemicals. I think across the entire space, we've seen decent growth happening, profitability improving, margins have been sustained, in certain cases even improved. So I think this, as you gradually see an up move happening or investor interest happening in the small cap and the mid cap space, this is probably one space where you could see faster traction as opposed to most of the other industry segments that could be there. And given the fact that maybe with very few exceptions, the industry has had a sustained and consistent both top line and bottom line growth, this is something that should happen maybe in the next quarter itself.
Okay, that's the view and coming in for some of those stocks. But pull up Merck Limited. Pull up the intraday chart of that one. It's locked in upper circuit now with 20% gains. The numbers came in just a while back, and look at the move there. I think it's the bottom line number, 48 crore versus 20 crore, which was seen in the corresponding quarter of last year. But even in the 4th quarter, I believe the profits were only about 22 crores. So bottom line definitely robust, has doubled, more than doubled rather. So that's gone up on back of the numbers, though the top line growth is not so much. It's around 220 versus was 173 that we've seen at least for the quarter. We'll have to check if there were any one-offs for this one, but clearly the stock's reacting positively. Amar, coming on this one very quickly on the charts, how is Merck looking? I know it's at 52-week high, but on the higher side, what levels do you see on the charts?
See, overall, technically speaking, Merck definitely is very strong on the long-term charts as well, and it was witnessing consolidation between 2600 and 2200 for almost 5 to 6 weeks, and post that it has a breakout. So I would say that on the upside, 3200, 3250, that could be a level of immediate resistance for Merck. So any pullback can be used as a buying opportunity.
Okay, 320. Let's get closing strategies. Sacchitanand, I'll come to you first. Your top closing strategy.
Bank of Baroda looks weak. In fact, the way the price has declined below its short-term averages right now, 146.50, it is quoting at a stop loss can be placed around 148.50, and an immediate move towards 141 could be expected. So on the short side, STBT kind of a candidate, Bank of Baroda, stop loss 148.50 and a target of around 142.
Okay, so. Well, and that just this morning we were talking about the uptick in some of these stocks, and PAT, PNB, BOB, etc. come off today. What about you, Amar? Your top closing strategy?
I would say that one can look at NMDC because the way the stock has bounced back from almost 95 levels, and today has been a very sharp day, almost up by 6%. But I would say that any pullback ideally should be used as a buying opportunity somewhere in the region of 110 levels. 110 levels that can be used as a buying opportunity with a stop loss below 106 and a target of 115 on the upside.
Interesting. Nipun, we now have a formally formed AMC sector in place, 2 direct listed plays, a couple of indirect ones. The directly listed ones are the ones which are large enough, at least in AUM, if not market cap, to come to the notice of institution companies. What is your sense here? Worth investing, the AMC pocket?
Well, for sure. I think that's one space in terms of overall AUM is only expected to grow and grow fairly healthily over the next several years. This is one space which is very similar to what we spoke maybe sometime last month, which is insurance, where the opportunity size obviously is very large. Yes, there is the competition as far as the AMC space is concerned. That's likely to gradually happen through because of ETFs, where the margins would be lower as far as the AMCs are concerned. But I think the extent of opportunity size, the kind of penetration that we are seeing as far as the smaller towns, the semi-urban areas, and the kind of incremental investment that is happening from those areas. That's something which is ensuring that the equity cult is gradually catching on. And as one could say, probably equity is the new property, so to say, where instead of a lot of investment into physical assets, there is this financial asset move that has happened. So this is something which should continue. I think what's important is to understand that valuations today seem to be somewhat stretched. On the other hand, depending on how the inflows are very dependent on how the equity markets move or operate, or how the equity markets momentum is there and the sentiment is there. So while one has seen a fairly large quantum of SIPs coming in, incrementally there could be more addition of assets coming into debt funds as opposed to equity funds, or depending on really on how the equity market moves. So that also typically to some extent defines and determines the valuations of the AMCs. But overall, I think definitely positive. When you look at it from a longer term perspective, it's one space where we're likely to be seeing a lot more companies getting listed, and definitely a lot more investor participation happening. Our sense is probably more of institutional participation that could happen as opposed to pure retail participation.
Okay, in fact, that was the buzzword yesterday, Nipun, that there were a lot of anchor investors who came in to buy on day one who were allotted only between 10 to 20 crore worth of shares. Nipun, thanks a lot for joining us this afternoon and taking us through your views on the markets. Just 5 minutes to go, and there are a lot of stocks which are moving around. Pull up something like Max Financial, Adani Enterprises. Both these stocks have seen some bit of correction in the last few minutes. Max now actually sitting at day's low with cuts of 6%, and you've got Adani Enterprises also going down almost 4.5%. And the other stock which is actually inched higher is Piramal Enterprises. That's another F&O counter as well. So watch out for this one. Piramal is now sitting almost at day's high with gains of nearly 4%. Sacchitanand, on the charts, at current levels, would you take a bet on Piramal Enterprises?
Well, I think the structure looks good. In fact, the way momentum is shaping up, there is some room on the upside. We may see levels of around 29.85, 29.90 to be achieved. So probably from momentum perspective, one can initiate some long positions, keeping a stop loss somewhere close to 28.60 on a closing basis.
Interesting. Okay. Sorry, just one quick question that I had, and that was on Titan Company today. 3% higher, 929. It's masking in some of the disappointments and climbing back higher. Amar, any thoughts here? Titan, amongst the top gainers, in fact, yeah, the second best performer on the Nifty today.
Yeah, actually, looking at Titan definitely is very strong on the short term and the long term charts. It was the intermediate term trend where the stock was witnessing some sell-off, but that seems to be away. So we have a buy call in Titan, which I said earlier, but not at the current levels. Any correction can be used as a buying opportunity with the upside of 945, 950, and the stop loss needs to be below 891.
Okay, Titan up 3% in trade, and your result reactions: Avanti Feeds, Coupling Point, Adani Power, or be it Navbharat Ventures. This is surprising because the numbers from Navbharat were looking pretty good, and that stock has also, look at that, it opened in the green actually, but now it's almost at day's low, sitting with cuts of almost 7% in trade. And obviously Merck is locked in upper circuit, and guess what else is locked in upper circuit for a change, and that's Vakrangi, which is up almost 20% in today's trading session. Some respite for this counter, but just 3 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, as we were discussing, as flat as it can be.
Yeah, as flat can be. Look at this, Navneet. There's just no movement here on the Nifty, and it's actually stayed that way. It's not that it's been a day of a lot of gyrations and then settling down at zero. Yes, there would be some gyrations, but by and large, a dead mean line about yesterday's levels. Probably not bad. Mid caps and the small caps have corrected a wee bit, so 0.5% to 1% or thereabouts. 1% for the small cap space, but about 0.25% for the mid cap space. So that hasn't corrected too much, but the small caps certainly have. The market bet could be slightly adverse today. Let's talk about the large caps first. And banks have taken a U-turn. That's the clear message out here. But let's look at what's doing today. Tata Steel up 4%. All steel companies have done well today. Titan about a couple of 3 percentage points higher. Bajaj Finance and Asian Paints about a couple of percentage points. Eicher about a couple of percentage points. Some gains into Hindalco as well. So that's giving company to Tata Steel from amongst the metal names. And Maruti Suzuki rises a bit. But Adani Ports, a big reaction to its numbers. Marginal miss, but down about 6.5% today. HPBP have looked slightly wobbly today, down about 1.5% or thereabouts. But State Bank of India, there is Axis Bank in this list, maybe not in the top 10 losers, but in this list as well. Sun Pharma has looked weak, Cipla has looked weak. So a clutch of names working at play and trying to negate or negating the impact that came in as a result of moves into certain consumption names. But that's the large cap picture. Now the mid caps and the small caps, a slew of movers, a lot of stocks hitting upper circuits as well today.
That's right, Neeraj. While the indices took a breather in today's session, but there were a lot of individual stocks which were moving around and largely on back of earnings. Let me start off with something like Merck, which came out with the numbers in the second half of the session. The numbers looked pretty good. The profitability this time around more than doubled for the company. It was up 20% at one point of time. Right now, it looks like the circuit has been open and the stock will be closing with gains of 17%. Well, paper stocks, they don't cease to surprise you, at least since the time we've got got few earnings from the likes of JK Paper and all. So once again, in the last hour of trade, you had something like International Paper going up 10%. Also, Tamil Nadu Newsprint, I just checked, that counter also went up in the last 5 to 10 minutes of trade. And from the metals pack, Nifty Metals Index rose in trade. So you had NMDC, remember that comes out with the numbers tomorrow, but also the iron ore prices in the international market are near 4-month high. Probably that's the reason why the stock is up 6%. And from the metals pack, you also had something like JSPL, which surged in today's trading session. Earnings reaction from TVS Motor Street, giving it a thumbs up. Numbers in line, but it was the margin picture, I think, which augured well. At least in today's session, we did see the stock moving up. The margins did expand a bit on year-on-year basis, and Pyramid Enterprises went up in the second half of the session. That stock's closing around the day's high mark. On the losing side, I've got a couple of losers, and majority of them result reaction, starting with PNB. Looks like the slippages number over 5,000 crore didn't go down that well. Management commentary, however, highlighted that from September quarter, they will not see any fresh slippages, 8% lower for this one. Motherson Sumi was the other counter, which was down post its earnings. As you can see in the intraday chart, it fell more post the earnings and closing at day's low mark. Adani Power came out with the numbers yesterday post market hours, and clearly Street giving it a thumbs down to this one. Max Financial also corrected just in the last hour of trade, I believe, down 6% in trade. And also Adani Enterprises, that too went lower. And result reaction from Avanti Feeds, numbers did not look that great for this one. That was lower by almost 10 to 13% in today's trade. And surprisingly, Navbharat, where the numbers looked pretty good on year-on-year basis, stock, however, came under pressure. We didn't see any major gap up opening, so to say, for Navbharat post the numbers, but still the stock did see selling pressure even from the levels it opened at. So finally closing around the mark of 129.
Well, interesting day of trade, and while it was flat, as Navneet explained, the broader markets did very well. So this is the picture at close. Let's bring up the European picture first, and then we'll get in the contributors list, just to show you what the world markets are up to as we shut shop, and whether there could be some negative surprises. Remember, yesterday Europe was mixed and down, but Dow was doing well. In today's session, Europe is starting off, or in fact is trading very, very well for itself. Good going. Dow futures about 1/3%. Nasdaq was about 0.6% yesterday, led by Facebook. So the world market seemed to be in okay place today. What about the turnover on our side? Let's see that first. Both the cash and F&O turnover should be interesting. Well,
just the same, Neeraj, I guess, like yesterday.
Yeah, but the new norm is back to 13 only.
Yeah, and I think that's one positive news, considering the markets have been trading around its all-time high level. It's always good to see higher participation on the cash side. So a range of between 30 to 32 is looking good, as opposed to the average range that we were seeing in the previous months of 27, 26,000.
Yeah, so this is one, of course. The contributors today, I mean, there won't be like too many big movers. Yeah, as you can see, HDFC Bank didn't come in the top 10 list, Navneet, but
yeah,
the top contributor on the gaining side just shows how woefully inadequately the other stocks moved in trade.
Yeah, and I think the PSUs came under pressure, and with that there was some profit booking seen for ICICI Bank and SBI also down in trade, but they didn't drag Nifty lower by so many points. But Reliance Industries, I think, was the top laggard for the day.
Yeah, I think corporate facing banks took a bit of a U-turn today. PNB and BOB not in this list, obviously, but both of them down
too.
The
Nifty PSU index was down, I think, 2% in trade post PNB's numbers.
Yeah, interesting. 18% gains in the last 30 days, down about 2% in the session today as well. The market breadth would have been negative, marginally at that, or maybe slightly more, but would be negative. Yeah, just about, you know, 9:7. That's the best ratio that I can think of it right now. Anyways, final thoughts from both our experts. And Sacchitanand, to you first. How does this set us up for the next few days? Do any of the indices, the non-Nifty bank indices, look attractive? Beat the PSU Bank index on the downside, if you will, or maybe the mid-cap space and maybe that index looking strong. How are the non-Nifty bank indices looking?
Well, Neeraj, in fact, we started the discussion with the relative strength analysis on the indices, and then this is why we have we are of the opinion that the markets are at a tipping point. So even if you look at last couple of trading sessions, the market is losing its velocity, and if you look at the closing basis patterns itself, we are seeing multiple dojis getting occurred near this particular congestion zone of around 11,500. So probably we are sensing a top in the process, and that's why we are not that optimistic from here on. We expect the markets to again tilt down towards say 11,100 kind of a level. If you look at Nifty Mid Cap 100, that is Mid Cap 100. This is one index which is very interesting. So this index has been oscillating within a downward sloping channel, and the upper end of the channel is placed somewhere close to 19,200, and this is where the index is placed right now. So probably this could be an interesting space in case if this particular index starts moving below say 18,950 or so. We may see a bigger drag coming in this particular indices. On the contrary, a breakout above say 19,400 on a sustained basis probably could change the scenario. But as of now, I think the bets are more on the short side rather than long side, and I think mid cap index is something could be critical going forward.
Okay, let's see how the markets open tomorrow. European cues are positive, and the Dow futures also indicating that the US markets are likely to open in the green. But Amar, your approach would be tomorrow on Nifty or on Bank Nifty, if somebody's carried forward their long positions, they should maintain it?
Yeah, definitely they should maintain their position, and yes, the markets are in uncharted territory, so we are witnessing volatility, and that would stay. That would be part of the game. But I would say that one needs to watch out for on the downside 11,270, 11,300. That should act as an immediate support level. If that is breached, then we could see some further selling in the market. On the upside, 11,430, 435, that would act as an immediate level of resistance.
Okay, that's the view coming in on Nifty and the other indices. On that note, would like to thank both our technical experts, Sacchitanand and Amar. Appreciate both of you joining us today and taking us through your technical views on the markets, a couple of indices, and also on individual stocks. Well, on that note, we'll wrap it up here in this edition of Countdown. It's goodbye from Neeraj and my side. Thanks a lot for watching the show, but don't go anywhere. Stay tuned to Bloomberg Quint for more news and updates.